As a corporation business owner, you will want to know the common mistakes that Canadians make when it comes to prepping and filing their T2 return. The first is incorrectly categorizing expenses. So this can be things like, for example, trying to claim golf memberships when we know that that is not an eligible expense that can be deducted. We know that meals, for example, can only be deducted at 50%, so trying to claim it at 100% is not allowed. And of course, it can also mean things like claiming expenses as all current expenses when maybe they should be considered capital expenses. And capital expenses are when you acquire items or assets that will be used within the business for a long period of time. The most common of mistakes is certainly going to be missing the deadline. So making sure that you're aware of what your filing deadline is for your T2, which is within 6 months of your fiscal year end, is going to be extremely important. And on that, of course, knowing when you need to file for payroll, GST, HST, and remit whatever balances need to be remitted, because you want to avoid penalties and interest as much as you possibly can. And then lastly, failing to track your shareholder loans. We know that the CRA pays very close attention to shareholder loans, so you need to make sure that you have a very clear schedule of the dates that balances were withdrawn from the business, any repayments that were made, any balances that are left over, because when you don't pay the balance taken out of a corporation as a shareholder loan within 1 year following, you will be subject to income attribution to yourself as an individual Canadian filer. And these are just some of the common mistakes that I see that Canadians are making with respect to their T2 returns.